Hi everyone, for today's lessons we are going to discuss accounting for our partnerships. In the first part of these lessons, we are going to discuss the purposes of partners' capital accounts, partners' current accounts, and the profits or loss appropriations accounts. Then in the second part of these lessons, we will discuss the accounting for partnerships when there is changes in the ownership structures. In the partnerships accounts, there are three important accounts that you should be aware of. The first one is the capital accounts, the second one is the current accounts, and the third one is the profits or loss appropriations accounts. The capital account is similar to equity accounts in corporations. It is open for each partner to record the capital contributed when the partnership is formed. So when a partner invests in the partnerships, let's say a partner invests cash in the partnerships, the journal entries are you debit the cash, you credit the partner's capital accounts. So if the partner invests assets in the partnerships, so you debit the assets accounts and you credit the partner's capital accounts. So if you look into the corporation's equity accounts, you will have like share capital, your retained earnings, or revaluations reserve. But in partnerships, you don't have these types of equity accounts, but you have an accounts which we regard as capital accounts. The current accounts is a type of equity accounts. This accounts is used to record frequent trading transactions between the partners and the partnerships. It is unlike the capital accounts because the capital accounts is usually fixed, while the current account is the current total of appropriations and the shares of residual profits or loss less drawing. So current account increases when partners receive interest on capital, interest on loans, salary, and the remaining profits made by the business. The accounts decreases if the partners make any drawings or charge interest on the drawing during the year. If the partner made drawings in the form of cash, so the journal entry is you debit the partner's current accounts and you credit the cash accounts. So if the drawing is in the forms of goods, then you debit the partner's current accounts and you credit the purchaser's accounts. So the journal entries for charging interest on drawings is you debit the partner's current accounts and you credit the interest on drawing accounts. So why is it the interest on drawing accounts is being credited? Because the interest on drawing accounts is an income to the partnerships. So if it's an income, credits represents increases. If the salaries are paid in cash, so you debit the partner's salaries accounts and you credit the cash or bank accounts. So if the salaries have not been paid, then you credit the partner's current accounts. Right, so any commissions that is paid to the partners is a gain to the partners but an expense to the partnerships. Therefore, the journal entries are you debit the commissions to partners' accounts as an expense to the partnerships and you credit the partners' current accounts. The third accounts in the partnership is the profits or loss appropriations accounts. Profit or loss appropriations accounts is an accounts continue from the profits or loss accounts or the income statement in the partnerships. This accounts is used to show how net profits or loss is appropriated or allocated to each partners. So item under the appropriations accounts includes the partner's salaries, interest on capital, interest on drawings, or share of profits or loss. So interest on capital is actually the interest income that the partners receive from the capital that they have invested. So the journal entry to record interest on capital is you debit the profit appropriations accounts because it is an expense to the partnerships and you credit the partners' current accounts. The partner's salary accounts has to be transferred to the profits appropriations accounts. Therefore, the journal entries are debit the profits appropriations accounts and credits the partner's salary accounts. On the other hand, interest on drawings represents an income to the partnerships because the partners withdraw some cash or goods in the partnerships and the partnerships actually charges the partners on the drawings. So the interest is actually an interest income to the partnerships. So how do you record these transactions? You debit the interest on drawings accounts and you credit the profits appropriations accounts as an income to the partnerships. In the partnerships, the partners can agree to any methods of dividing profits or losses. In the absence of an agreement, the law said that the partners equally share profits or losses of a partnerships. So if the resulting balance in the profits or loss appropriations accounts is profits, the journal entries to allocate the profits is debit the profits or loss appropriations account and credit the partners' capital accounts. If the resulting balance in the partnerships is losses, the journal entry is debit the partners' capital accounts and credits the profits or loss appropriations accounts. This is an example of the profit and loss and appropriations accounts in partnerships. So if you look on your slides, you would notice that it starts off with net profits. Okay, so you add with any interest on drawings, which is an income to the partnerships, and you less with any interest on capital because you paid your partners the interest on their capitals, and you less the salaries because you paid the partners the salaries, and any net balance between the net profits and the net trading transactions between the partners and the partnerships, which is 10,000, you actually share this among the partners. So in this case, this is a surplus which we regard as profits. So you share the surplus or the profits between the partner. If it is a loss, then you will have to share the loss between the partners according to their profits or loss sharing ratios or according to what has been stated in the partnerships. We're going to take a look at one illustrations about a partnerships, and the illustrations actually required us to prepare the partners' capital accounts, the partners' current accounts, and also the profits or loss appropriations accounts. So on these questions, Lisa, Haris, Alif are in a partnerships sharing profits in the ratios of 3:1. Their partnerships agreements includes the following terms. Alright, interest on capital is 12% per annum. Salary to Alif is 8,000 per annum. Interest on drawings is 6% per annum, and interest on loan by Lisa is 6% per annum. So the net profits for the year ended 31st December 2013 was 26,530. Assumed interest on loan by Lisa has not been deducted from this amount. Capital balance as at 31st December were Lisa 22,000, Harris 10,000, Alif 8,000. Current account balances as at the 31st December 2013, Lisa is 5,500, Harris is 2,700, and Alif is 3,800. Drawings by the partners during the year were Lisa 8,000, Harris 6,000, Alif 9,000, and loan from Lisa is 8,000 on 31st December 2013. So you are asked to prepare the profits appropriations accounts, capital accounts, current accounts, and a statement of financial positions as at 31st December 2013. So how are you going to prepare these accounts for these questions? We are going to look at the solutions to the illustrations next. If you look at the profits appropriations accounts, you would notice that it starts off with the net profits brought down 26,530, and then on the credit side you will have the interest on drawings. Okay, so for partners that withdraw any cash or any goods in the partnerships, they would have to pay interest. So this interest is kind of an income to the partnerships, therefore is on the credit side. It's going to add against the net profits. So Lisa would have to pay 480, Harris would pay 360, and Alif would pay 540. So how do you get this amount? If you actually check on your slides, you would notice that the question actually state that interest on drawing is 6% per annum. So 6%, let's say we take Lisa's drawings on 2013 is actually 8,000. So 6% times with 8,000, you actually get 480. Alright, so on your debit side, you would have interest on capital. So what do we mean by interest on capital? It's basically an interest income that the partners receive because of the capital that they have invested into the partnerships. So this is an expense to the partnerships. Therefore, you will have to classify the interest on capital on the debit side because it's going to reduce the net profits ultimately. So Lisa would pay an interest on capital of 2640, Harris would pay 1200, and Alif would pay 960. So let's take Harris. How do you get 1200? Is actually, if you look on the questions, it stated that interest on capital is 12% per annum. So Harris' capital balance as at 31st December is actually 10,000. So 12% times with 10,000 is actually 1,200. So this is an interest on capital or interest income that Harris would receive. Then salaries were paid to Alif of 8,000, and then the remaining balance, if you take 27,910, you minus with 4,800 and also 8,000, you will get the remaining balance or net balance of 15,110. So this balance, it would have to be shared among the partners based on their profits sharing ratios, which is 3:1. Lisa would get 3, Harris would get 2, and Alif would get 1. So let's take an example for Alif. So how do you get 2,518? It's actually 1/6 you times with 15,110. So why is it the denominator is 6? Because you add 3 plus 2 and plus 1. Okay, so in total you actually get 6. So 1/6 you times with 15,110. Alif would share the profits of 2,518. If you look on the current accounts of the partners, it has balance brought down on the debit side as well as on the credit side. So on the question, it stated that Harris has a negative balance, so therefore it is on the debit side. On the other hand, Lisa and Alif have credit balance, so therefore it's on the credit side of the current accounts. So this is the interest on capital. We have computed this on the profits appropriations accounts. So in the profits appropriations accounts, interest on capital is actually on the debit side. So in the current accounts, it will be on credit sides. This is like an income to the respective partners. Therefore, it is on the credit sides. And then salary, Alif received 8,000 salary. So this is an income to Alif. Therefore, it's on the credit sides. And then the profits is shared among the 3 partners. So if it's a profit from the partner's perspective, this is going to be their income. Therefore, it's on the credit sides. Okay. So on the debit sides, you have drawings. So each partners made drawings, 8,000, 6,000, and 9,000 respectively. So drawings reduce their current accounts balances. Therefore, it's on the debit sides. And then you have interest on drawings, which is the partnerships charges interest on their drawings. So it is an income to the partnerships, but it is an expense to the partners. Therefore, on the partners' current accounts, it will be on debit sides because it's going to reduce their current accounts balances. Okay, and then you have to compute what is the net effect of all these transactions on their current accounts. So if you compute the total amount of Lisa would be 15,695, Harris would be 9,060, and also Alif would have 15,278. Okay, so over here for Lisa and Alif, they have credit balance, so their balance that is going to be carried down will be on the debit sides. Okay, on the other hand, Harris has more debit balance, okay, than the credit balance. Therefore, on Harry's credit sides, it would have a balance carried down of 2,823. Okay, so next year, the opening balance in Harry's current accounts would be on the debit sides. Okay, from here if you carry it down, so the opening balance, which is balance brought down, would be on the debit sides. On the other hand, for Lisa and Alif, their opening balance would be on credit sides. Okay, so let's take a look now on the capital accounts. So how do you get this amount? It's basically from the questions. If you check the questions, it's stated that their capital accounts are 22,000 for Lisa, Harris would get 10,000, and Alif capital balance is actually 8,000. Okay, so there is no capital transactions in the capital accounts, therefore the debit balance and the credit balance are equal. Let's take a look at how the statement of financial positions for the partnerships is prepared. So it starts off with the net assets of 58,130. So how do you get the 58,130? It's actually the balance as at 31st December 2013. The initial balance of the capital accounts is actually 40,000. So you add the capital balance in Lisa, Alif, and Harris accounts, and you will get 40,000. This is then added with the current accounts of each partners. You will get the total amounts of 6,600, and then this is added with the loan that Lisa provided to the partnerships of 8,000. You add also the net profits of 26,530, and you minus with the total drawings of 23,000. Okay, so you will get the net assets of 58,130. This is financed by the partners. All these amounts, it is financed by the partners. So the first one is from the capital accounts of the partners, which is 22,000, 10,000, and 8,000. You get all these balances from the capital accounts of the partners on the balance carried down. Okay, and then on the current accounts, you will get 7,215 for Lisa, Harris negative 2,823, and also Alif 5,738. So how do you get these figures? They are actually from the balance carried down in the current accounts. Right, these amounts are then added with the loan given by Lisa's of 8,000. So the total balance is actually 58,130. Explanatory notes are giving you further details about how the accounts are prepared, how each items are computed. All right, take a few minutes and have a look at each of the explanatory notes to get ideas how each of the items in the capital accounts, in the profit realizations accounts, in the current accounts, as well as how the balance sheets are computed. Right, we have discussed in the first part of the sessions how we can prepare the basics partnerships accounts. So now we are going to look into the changes in the partnership structures. We will consider the changes in the ownerships of continuing partnerships that resulted from a change in the profit sharing arrangement among the existing partners, or admissions of new partners, or death or retirement of an existing partners. All right, so circumstances in B and C will affect the profits sharing arrangements among the existing partners. When there is a retirement or death of a partner, the partnerships has to revalue the net assets in the partnerships at current values. So the profits or loss on revaluations of each asset is credited or debited accordingly to the revaluations accounts, and subsequently to the partners' capital accounts according to their profits sharing ratios. Next, we also have to compute the goodwill accounts. So goodwill is brought into partnerships whenever there is a change in the admissions of a new partners, or there is a death or retirement of an old partners, or a change of the profits sharing ratios. So there are two methods to calculate the goodwill. It is either based on accounting profits methods or super profits method. So if it is the accounting profits methods to calculate the goodwill, so the value of the goodwill is actually the values of the average annual net profits for a specified past number of years. So if you use the super profits method, you are going to value the net profits after deducting any salary paid to the partner and interest on capital. Alright, and the annual super profits is then multiplied by an agreed number to arrive at the values of goodwill. So let's take a look at the first method to calculate the goodwill based on the accounting profits methods. So on Ang's retirement, goodwill was taken to equal to 2 years purchase of the average annual profits of the last 5 years. Okay, so if you use the accounting profits, you have to calculate the average net profits. Okay, so you are given the schedules from 2009 to 2013. All right, all the annual profits. So you have to compute the average profits of the past 5 years. So you will get the average net profits of 98,200. And this profit is then multiplied with the 2 years purchase of the average annual profits. Okay, so 2 times with 98,200, you will get the goodwill of 196,400. Next, let's take a look at how you could compute the goodwill based on the super profits methods. Okay, so the illustration said that the total salaries paid to Ajay, Bujal and Chan was 30,000. The capital employed was 550,000 and return on capital employed was 20% per annum. Net profits for the year ended 31st December 2013 was 200,000. Goodwill was taken as equal to 4 years purchase of annual super profits on the retirements of Bujal. So you are asked to calculate the amount of goodwill. So we have discussed if you use the super profits methods, the super profits methods are the values of net profits after allowances have been made for salaries to the partners and interest that would have been earned if their capital had been invested elsewhere. Okay, so you would have to take the annual net profits, you minus with the salaries of partners, and you minus with the interest on capital employed. So you will get the net balance of 60,000. So this balance is then multiplied by an agreed number of agreed numbers to arrive at the values of the goodwill. So on the questions, it has stated that the goodwill was taken as equal to 4 years purchase of annual super profits. So 4 is the agreed numbers to get the goodwill. So 60,000 you times with 4, you will get 240,000 as the goodwill. So you have to be aware, once you have calculated the goodwill, you're going to allocate this goodwill to the partners before the change in the partnership structures based on the old profits sharing ratios, and this goodwill will also have to be allocated to the new partners based on the new profits sharing ratios. Okay, so you will have to open a T accounts, okay, which is goodwill. Alright, so on your debit side over here, you will have to allocate the goodwill according to the profits sharing ratios of the old partners. Okay, and then on the credit side, you will have to allocate the goodwill to the new partners based on their new profits sharing ratios. Okay. So previously, we have discussed the accounting treatments for death or retirements of partners. Now we're going to discuss admissions of a new partners. When there is admissions of a new partners, the old partnerships would be dissolved, and a new partnerships is actually emerged. So when an old partnerships is dissolved, the net assets in the partnerships need to be revalued and the goodwill needs to be calculated based on the accounting techniques that we have used to compute the retirements or death of our partners. There are additional issues about preparing the partnerships accounts that you need to be aware of, especially if there is a change during the accounting periods. Okay, so if you notice that there's a change in the partnerships during the accounting periods, so you have to apportion your profits before the change and those arisings afterwards. Okay, so in your profits appropriations accounts, you need to prepare the before and after the change. Okay, so how do you prepare that? In your profits appropriations accounts, you will have the pre columns and the post columns. Okay, the pre columns would be before the change and the post columns would be after the change. So you will have to apportion the transactions according to the pre and the post periods. So why the profits appropriations accounts needs to be prepared before and after the change? That is because we assume that the net profits is to be unevenly throughout the accounting periods. Okay, so therefore the appropriations will be calculated based on a time basis. Alright, so another important issues that you have to take note on is the change in the partnerships agreements, because this is going to affect the amounts that you are going to calculate before and after the change. Okay, you also need to be aware whether the terms in the partnerships agreements is affected or not, or whether the terms in the agreement has been changed or not. Okay, if it has been changed, this would also affect the amount that you calculate for your partnerships. So we have come to the end of the first part of the topic. So in this video, we have discussed about how you could prepare the basic accounts in a partnerships, and also we have discussed some of the important points that you should take note of if there is any changes in the ownership structures of a partnerships. I have uploaded the slides. In the slides, you would be able to get more illustrations. There are additional illustrations in the slides. I hope you take some time to go through the slides and get a clearer pictures about how accounting for a partnerships looks like. And also I've uploaded some activities for you to do on the Moodle. Alright, please try to do the activities. Please refer to the slides. I believe that if you have gone through all these activities, you will get clearer understandings of how you could do an accounting for partnerships. So thank you for listening. I hope you enjoy the lessons, and I will see you next time.